In this video, we're going to go over how to use the PropFirm Algo trading strategy on TradingView. If you haven't already seen the video how to install on TradingView, be sure to watch that video. And we also have the software available for MetaTrader. But in this video, we're going to go over how to properly use the software on TradingView. Let's start off with how we detect bullish trends. The first thing that we will see in a bullish trend is a white cloud. But in order for us to see that, we're going to have to go way back to when a bullish trend started. One of the things I want you to notice is you only have buy signals when there is a bullish trend. You will not get a sell signal, let's say here, when the trend is bullish. Obviously, because this is a price action trend indicator. So with that being said, right here was when the bullish trend started, and we have these arrows to give you possible reversal points. The reversal points are not meant for entries. The entries are the signals. And unlike other indicators, these signals are not based on volume or any other metrics that have no consistency. Our entry strategy is based on a set of market conditions. And when opening up the settings, you will find that there is not too many modifications that can be done. You can only add or remove signals, which we'll go over in a bit. Plus the option to turn on top-down analysis, which will give you a visual representation of higher time frame support or resistance while looking at, let's say, the smaller time frame. Here you could see the 4-hour support while still looking at the 15-minute time frame. This is extremely powerful, so that way you can take long signals that are closer to the 4-hour support and stay away from long signals at the high. Just in this latest entry, you could see that we have a profitable move of 213 tips. But let's go ahead and find a random signal back here so we can show you how these entries are fired and what to look out for. All right, perfect. Here you could see the start of the bullish trend was at this white candle, right where the white cloud started forming. We're going to go ahead and wait for the entry point. The entry point is provided to you by 4 different lines. We're going to open this up just a little more so we can see more detailed information. See, it's very tight here, but you could see that there is a line here that's separated, a second dotted line, a third dotted line, and a fourth dotted line. We're going to show you what these dotted lines mean and how we can use these institutional entry lines to our advantage. So be sure to stick around because we're going to talk about this later in the video. So what we're looking for is a retracement. The retracement is going to come down to one of these entry points, A, B, C, and D. Once price reaches this level, you're going to see an activation of a signal. In this case, it will be a buy signal, mainly because, again, this is a bullish trend. Notice that the buy signal was fired immediately when price touched this level. So we're going to remove this arrow and make a positioning tool. Let's zoom out a little bit and make a buy entry. We're going to put our stop loss right behind the 4-hour support and resistance, or the B institutional entry line, which again, we'll cover later on in this tutorial. Then we're going to have a minimum of 1 to 2 risk to reward. Now that our 1 to 2 risk to reward is set, let's go ahead and see how this plays out. Amazing. TP was smashed. So a couple things that we could have done that is not available on TradingView is using the risk manager for position sizing, automatic lot size calculation, automatic stop and profit, automatic trailing stop, and much more. This is a lifetime members only dashboard, which we'll cover in another video. We also have free signals via our Discord, so you can go ahead and test our price action signals using our Discord free alerts. Now, in the case that we're looking at a higher time frame and you see that price is far away from our entry point, again, we're expecting for price to come back to the entry point and then going long at the entry. So lots of traders, especially new traders, will think that this is a good opportunity to go short after seeing so much pressure to the downside, but this is the actual opportunity for us to go long. Doing the complete opposite of your typical retail trader. A riskier approach is here zooming in on the smaller time frame, knowing that we're looking for a pullback. Anticipating the pullback and going to the smaller time frames is a riskier trade. For example, getting this reversal alert, waiting for a bearish trend, then then having the same exact entry except to the downside, then entering on the sell signal for a short-term trend bias entry. The risk that comes along with that is anticipating a large pullback and then having price never return when expected. But eventually, you will find price come down. So instead of rushing into a counter trend trade, try to wait for the proper setup when price comes to the institutional entry line. We're about to see the entry hit again, and price hit the institutional entry line. Notice that price came to the institutional entry line, but there was no signal fired. And that's because the candles are gray. Whenever the candles are gray and price hits the institutional entries, this is considered a riskier trade. You can still enter on short pullbacks, but it is not recommended. It's best to wait for a trend confirmation like this and enter once we have a bullish or bearish confirmation. Here, now we have a confirmation for entering long. We could repeat the process by doing the same thing over again, going long here, putting our stop loss behind the cloud, and using a 1 to 2 risk to reward. It's also important for the trader to apply their own analysis. For example, here we had a buy entry, but clearly we are in a consolidation phase. You could clearly see that price is consolidating in this area here, and if we remove our entry position, it is exactly at the 4-hour resistance. We could hold on to this trade and let it play out, or realize that this might be a risky trade, mainly because the 4-hour resistance has been plotted right above our entry. So if the 4-hour has previously fell at this area looking at the past, it is very likely that price again might fall at the 4-hour resistance. But in this case, we're going to accept our risk amount and let the trade play out. As you could tell, this is not a good trade. And at this moment, once we're in profit, using the risk manager, we have a couple features that you can put your stop in profit and automate this using our MetaTrader software, which will also be available on MetaTrader 5. So hurry up and use the discounts for the lifetime membership before the lifetime membership only update MT5 is released. In this case that we have our trade at break even, here we would have gotten stopped out in profit at break even. Let's talk about this scenario. We're only 15-minute time frame, and we could still clearly see the 4-hour support and the 4-hour resistance. So we are seeing the higher time frame support or resistance or supply and demand while still trading on the 15-minute time frame. Notice that this buy signal is not at the very low at the 4-hour support or at the very top 4-hour resistance. If the buy signal was near the 4-hour resistance, this would be considered a riskier trade. As you could tell, at the 4-hour resistance, price completely plummeted to the downside. And the fact that the buy signal is not at the bottom near the 4-hour support, which makes it a least riskier trade, we have the price somewhere in the middle, making this entry signal a 50-50 when it comes to risk. It's not a really risky trade, and it's not a less risky trade. It's somewhere in the middle. If you presented this opportunity, just make sure to risk less and use the bigger lot sizes for when price is at the 4-hour support for longs or 4-hour resistance for shorts. Let's use the long positioning tool and see how this turns out. And in this case, we're going to exit at the 4-hour resistance, mainly because price can come back to this level. And we're going to look at this previous low where price was rejected multiple times and put our stop loss just below this area. Here you can see we have a 1-to-1, and again, a 1-to-1 is not a favorable risk to reward. You always want to have a risk to reward that's greater than 1-to-2 for long-term profitability. Let's see what happens. In this case, it did hit take profit. We did suffer some drawdown, but this was a successful trade. Let's go back and find a bearish entry, something like this. You could tell that once price hit the institutional entry line, we had a sell signal. Let's go ahead and use the short positioning tool for this example. We're going to enter short here, and we're going to put our stop loss behind the B institutional entry line or the daily resistance. I want you to notice where the previous low is. It is a good rule of thumb to always use the nearest low to exit your trade, or at least put your stop in profit. So if our take profit was at the nearest low right here and stop loss behind the B institutional entry line, this risk to reward is way less than 1-to-1, making this a very horrible entry. If you struggle using risks to reward while trading, the good news for you is we have an automatic risk to reward feature with the new Dashboard 2.2, which is for lifetime members only. We'll talk about this in a separate video. Let's go ahead and press play. Right here, you could see that price is failing to break this area. Again, it's a good idea to use your own analysis. We could see that candles are rejecting here, and where there was previous resistance, it is now acting as support. We could put our trade at break even here, especially seeing a possible reversal point. There you could see the reversal point. So in this case, we put our stop and break even with one click of a button using the risk manager, which needs to be executed manually for the basic premium members, with the option of having it execute automatically reserved for lifetime members only. And here we had a break-even trade. Following this, we had a bullish confirmation coming down for the retest, hitting our institutional entry line, and then absolutely flying to the upside. This is what our strategy does. It is an institutional entry price action indicator, which is exclusively held only for 1,000 members. Let's go back to another area and find another bearish entry. Again, we're looking at buy signals only because this is clearly a bullish trend. Let's just take a look at this signal right here and count how many pips just from here to the previous 4-hour support or resistance. That is over 1,000 pips using PropFirm Algo. A great example of a short entry is right here. Let's zoom in. So here we have an example of a bearish trend where the cloud is seen green. Use the green cloud as an indication of a bearish trending market. Right at the reversal point is the first indication where the bearish trend is going to begin. Remember that the gray candles is a no trade zone. Once price reaches the institutional entry lines and the signal is fired, we could go ahead and enter short with having a TP to the previous 4-hour auto support or resistance, or even the most recent high or the previous low. One of the strongest features of PropFirm Algo is that the signals fire exactly when price reaches these levels. Meaning when price reaches these institutional entries, a non-repay, non-lagging signal is populated. Let's remove these drawings and show you exactly how and when these entries are provided to the user. See that the signal was populated when price hit the institutional entry. So if we would have entered here at the A institutional entry line, we would already been in profit 26 pips with a relative drawdown to almost zero. Using the short position, if we'd entered at the A institutional entry line and having a TP at the daily support, let's go ahead and watch what happens to price. NTP was smashed. From here on out, we're just going to go ahead and press play and see what happens. Price has hit our entry point, but we have seen a continuation to the B institutional entry line. I want you to notice that the candles are gray. But if we see a constant rejection of price while the candles are gray with having a bearish trend, we can do a short scalp from the B institutional entry line to the A line. And be sure to stick around because we're going to talk about what these institutional entries are in the settings later in this video. Let's see if price rejects at the B institutional entry line. In this case, we have the B line colored blue. And look at that. Price rejected multiple times. And from the B line down to the A line, that could have been a counter trend trade or a riskier trade. Let's continue to watch and see if price goes to the entry point, hits our institutional entry lines, and continues following price action. Well, that was a simple setup. Right at the entry point, going short and TP at the previous low. Let's look at the first original short entry right here and count how many pips we are in profit. That's 347 pips in profit called out by the PropFirm Algo indicator. Now that you have a better idea on how to find bearish entries and how to find bullish entries, let's talk about the settings and what the institutional entries mean. Opening the settings, we have main count A and B, and also main count C and D. Now, let's go ahead and turn everything off, including the PropFirm Cloud, all the entry points, and in this case, also the trend detection colors. Let's make a quick comparison of regular candles. Let's take a look at this section here. Does this look familiar? If we go back into the indicator and turn on the trend colors, the cloud, and the signals, we're going to find something quite interesting. Right here is where we went short. But by taking off the indicator, how many traders do you think went long right here thinking that price was going to continue? This is the power of PropFirm Algo. All right, let's talk about the settings. Here in the PropFirm Algo 2.1, which is the latest version, here we could turn off or on the signals for A, institutional entries. So by turning off the A entries, you'll see that some signals disappear. That means whenever price touched the A institutional entry, we did not get a signal. Let's turn it back on, and you're going to see the A signal populated. Right below the A enable, we're going to see the A institutional entry line. This is where we can show or hide the A institutional entry line. In this case, we have the A colored almost white. Feel free to use whatever colors you like, so that way you learn the difference between each institutional entry. We have the B institutional entry line colored B, being that B is the first letter of the color blue. By turning off the B main entry, we will no longer get entry signals if price reaches the B entry. Now this here is going to allow you to add or remove more signals per trend. Again, the trend is confirmed once we have an arrow, the color of the candles either white or green. If we put more numbers here, we're basically telling the algo to give us more signals per entry. So here we have 2 entries that are provided, being that we have ramped the number to 10, meaning every single time that price comes to this entry line, it's going to give us a maximum of 10 entries. It's a good idea to use more entries on the higher time frame and less entries on the lower time frame. And just with these default signals, notice that you do not need to change the settings per chart. Like here, we're choosing a random chart and look at these amazing setups on XAU USD. Let's choose another random chart without changing the signals. GJ. Without changing the settings, and we could clearly see that we have amazing setups using this same exact entry point without changing the settings. Let's choose another random chart. We're going to go with Euro NZD. And here, another beautiful example of not needing to change your settings per chart. Let's go ahead and this time choose a crypto chart. Here we have a faulty signal. Let's go ahead and scroll back. All right, but here there's a great signal. And now let's go back. Another good signal, good signal, good signal, good signal, good signal, bad signal. With just these, we have 1, 2, 3, 4, 5, 6, 7, 8 signals. And out of 8 signals, we've only had 2 bad signals. This exclusive entry strategy by PropFirm Algo has a win rate of over 82%. Let's take a look of all the members who have gotten funded using this algorithm. Feel free to take a look in our Discord to find out more. This is even perfect for stock trading. Let's go ahead and take a look at Netflix, for example. Here's Netflix. And look how many points it's been going on the Netflix trade. Another great thing is that it also works on any time frame. We're just going to go on the 1-minute time frame and zoom in. This is the 1-minute time frame on Netflix. Going to US 30, and again, we have some pretty impressive setups. Just this one here is a total of 180 pips profit, giving you multiple opportunities to enter. Let's go back into the settings. So remember, if you add more numbers here, it's going to give you more signals per trend. So with putting 5, you're going to get 5 B institutional entry signals and 5 A institutional entry signals, as this one parameter controls both A and B. Here we have 1, meaning we're only going to get 1 signal each time price touches C and only 1 signal each time price touches D. Now let's turn on the top-down analysis feature. This feature is great to be able to have multi-time frame analysis where you're able to show the daily, the 4-hour, the 1 hour, the 30-minute, 15-minute, or the 5-minute major support and resistance levels while looking at any other time frame. It is a good idea to use each individual entry line as a 0.25% while trading using PropFirm Algo, meaning you can separate your 1% entry divided into 4, each entry a 25th%, maximizing your opportunities to stay profitable and get funded by prop firms. Another advantage of the top-down analysis feature is the pip range filter. Here we can input how many pips or points we want to use to filter out unwanted signals. Though it's important to note that each chart has a different pip and point counting method. So 1,000 pips on the Dow Jones is going to be completely different than 1,000 pips on, let's say, a Forex pair. We're going to add more of the filter by ramping up the numbers and ticking 1,500. Now, notice that some of the good signals are going to get taken away. So in the next TradingView update, we're going to allow traders to view multi-time frame support or resistance with enabling the pip range filter off or on completely separate. This way, we don't miss out on good entries. The last setting is the RSI filter. By turning this on, we're telling the algorithm to filter any sell signals that are at the bottom of the RSI or whenever the market is oversold. Whenever the market is overbought on the 5-minute time frame, it's going to filter out the signals of the current time frame that you're viewing on TradingView. For example, we are filtering out signals based on the 5-minute RSI, but we can still go to another time frame completely and use that same filtering system. Another great powerful tool of PropFirm Algo. Well, I really hope that you enjoyed this video, and if you did, please do give it a like and subscribe. And if you made it this far, be sure to check out our discounts for the lifetime membership before they end. This algorithm is going to be closed off to the public once we reach 1,000 members. So hurry up now and grab an exclusive lifetime membership before we close doors completely. Thanks once again. Best of luck with your trading, and visit PropFirmAlgo.com to get access to the best trading algorithm.